Is this thing on? Happy Monday to you. You ready to have some fun? Man, I've got so much stuff today. I really don't even know where to begin today. We're going to talk about projections for mortgage rates as we lost more ground again today. So I'll pull that up for you here in a few seconds. We'll take a look at this chart. Where is that thing going? What is going on there? Some other people weighing in on what they think interest rates will be by the end of the year. Mortgage points. We're going to talk about that. This is obviously one of those advertorial pieces here, but it's a question worth discussing. Continually seeing data brokers causing lots and lots of problems out there, particularly when it comes to pre-screened offers. So I'm going to show you exactly how to opt out of this. You may not be aware of this, but you are opted in to the credit bureaus selling your information until you opt out. In other words, at birth, you're opted in, whether you like it or not. You have to physically go and say, I want off your list. Otherwise, the credit bureaus will sell your information, not just your information. And when I say your information, I mean everything: date of birth, social security number, emails, cell phone numbers, how much you owe on your home, how much money you make, everything. They'll sell everything to people for pennies per record, unless you go in and opt out. And I'll show you the site where you need to opt out. And they've made this site as rejectionary as possible. I mean, they want you to come here and not actually do this. So I'll show you that as well. There is a bill, by the way, HR 7661, that helps with this. So we'll talk about that too. Also going to look, we've had some pain here in the stock market recently. I'm going to do some TA here at the end. We're going to look at what's likely coming for stocks, and it's not good. This stuff should, by the way, be good for bonds, but it hasn't been. So let's start there. Let's start here with just basic analysis of what's going on with mortgage bonds. And, people like to move the needle. So I've seen people drawing this now as our as our channel. And you can do that, I guess. But that's not really what it was, right? The real channel was here, and it broke down. It did. It broke down, and that happens, and that's okay. We need to be as honest with ourselves as possible. For those of you who are new to this, when bond prices go up, mortgage rates go down. When bond prices go down, mortgage rates go up. So recently we've seen bond prices go down quite a bit. And today was no exception. We saw bond prices go down on Friday as well. Didn't seem to impact rates as much on Friday at least as it did today. And so not ideal. And also sort of like, well, hey, wait a minute, what's going on? We're seeing inflation ease a little bit here and there. Nothing crazy yet, but it's continuing to spike. We're not seeing the acceleration anymore. And the stock market's coming in. So what's the deal? Are big boys really selling bonds to buy stocks right here? They think the bottom is here, or the bottom's in this continuation. We're going to look at that today. I really couldn't tell you why bonds are so out of favor right here. Seems like they make a lot of sense personally, just from what I follow, what I'm watching. And you saw, Treasury yields spiked again today. So we're just at a spot where rates, the bond market and rates are just not in favor. And there isn't a whole lot that's in favor right now. Crypto getting hit again pretty hard. Bitcoin around 20,000 again. That pain is probably not over with either, unfortunately. So we're gonna go through all this stuff. But what Powell said shook the markets hardcore. We were down a cool G, 1,000 points on Friday. That was crazy. But, and I've seen 1,000-point days up and down before many times. But when you see just the weight of the market was very, very heavy. So we'll do some analysis on that as well. By the way, we're live on all kinds of things right now. Facebook, LinkedIn. We're live on LinkedIn, for goodness sakes. YouTube, of course. That's where all of the hardcore followers are here. Love to hear from you. Comment, say what's up. We're also live on Twitter. Ask a question, make a comment, and I'll get to those in just a bit. So let's take a look here now. Prognosis: mortgage rates will fall to 4.5% in 2023? Question mark. That's an estimate from Fannie Mae. Fannie Mae believes that. Can we trust Fannie Mae? I saw an article. I should have pulled it up for you. It was Goldman Sachs. Maybe it'll be on here. Let's just look while I'm talking about it. And it was from Goldman Sachs. and it said something like Goldman says now could be a good time to buy bonds. And I'm just like, oh no, it's the last thing I want to see. Those are just cattle calls, liquidity calls. Like it's the last thing I want to see. Ah, shoot, it's not on here. Well, anyway, it says something like Goldman Sachs says right now could be the time to buy bonds. I'm like, damn it. Because see, they wouldn't be doing that unless they're already mega long bonds, right? Which they could be, or if they know that a dump's coming or they're the dump that's coming. But I don't know if I can't confirm either one of those is the case. However, Fannie Mae comes out and says, hey, 4.5%, the rate on a 30-year fixed mortgage will fall to an average 4.5% in 2023. How do they know that? How do you know? Like, what is it? Just because you're Fannie Mae doesn't mean you can predict the financial markets, does it? Rates have jumped more than 2 percentage points since the beginning of 2022, largely due to Federal Reserve increasing borrowing costs. Not true. Consumers shouldn't necessarily delay a home purchase if they find an affordable home they like now, experts said. Now, that's interesting because typically CNBC, not very positive, not very bullish towards real estate, typically very bearish, saying, hey, people shouldn't pass up the opportunity to buy a home, which is sort of common sense. I mean, think about it like this. If you go back 3 years, okay, when the market was very competitive, rates were lower by, let's say, 2% or more. So rates were much lower, but people were having to pay up for properties. Now people are putting offers in below list and getting accepted. People are getting closing costs paid for. So there's always a give and a take in the market. And if you bought, 3 years ago, you're like, sweet, I got that 2.25 or that 2.75% interest rate. That was a smoking deal for me, and it was. But you probably paid up. You probably weren't a bidding more. You probably removed contingencies. You had to do other things. There's always a give and a take. So it's just a matter of which do you feel most comfortable with. I personally feel most comfortable as a buyer being in a market like this right now, which is why I'm looking at everything. I am looking at everything in all kinds of markets. Anything anybody sends me right now, I'm looking at it. The reason is because I like being a buyer in a market where sellers don't have a stranglehold on the transaction and the whole situation. I prefer to buy now, take a higher interest rate, refinance down the road when rates improve. If rates don't improve, then I'll be happy with my rate, right? But if rates do improve, then I can capture the lower rate. And I've already owned the home. I've already got rent coming in. I've already got a good situation going. So I personally prefer to buy in a market like this, exactly like this one. And I think that most home buyers should and would benefit more from wanting to buy in a market like this. The psychology is tough, though. I understand why so many people have exited stage left. So many people have gone to rent. So many people have said, I want to let this pass. We'll look at it next year. I understand because it seems like, well, things could get worse. And while that is true, it's possible, right? It's totally possible that rates could go higher, prices could go lower. That's all possible. Here's the hard part, though. And this is the thing that it took years and years for me to understand. Years and years and years for me to understand was when you decide you're not going to buy real estate, you have to pick two important points. You have to get out or stay out at a point in which prices are coming down, which if we look at the graph of real estate values over the course of time, it goes up and to the right. So there's very few times where it goes down. And then you have to pick the time to get in. So you have to be right about when to not buy and to stay out. And then you also have to be right about when to get in. And so getting both of those right is very difficult. For example, for myself, when I sold my home in 2006, people thought I was an idiot for a year plus. Like, you were dumb. Why'd you sell your house? It's like, because like this market is crazy and doesn't make any sense. And it was, I made money doing it. I thought that was just the right thing to do. Really, it's just me having a hard time staying in the market because when I saw the profit, I wanted to take it, and I was moving and coming to San Diego and all that stuff. But reality is that if you don't time the reentry, it actually costs me money. I didn't time the reentry perfectly. I got the exit correct, but I was late entering, and I would have been better off just keeping the home. So it's hard to do both. And so I do recommend that people right now take a hard look at the market. Doesn't mean you have to go just run in and jump and buy something, but take a look at the market. This is a good market for buyers. Take advantage of it. Let's see. Mortgage points. Should you buy points? No. Here's what you should do. Don't listen to me. What am I? Derrick Evans, NMLS 155010. That's all I am. But if you believe that interest rates will go lower in the future, then do not buy points. If you believe that interest rates will go higher in the future, then go ahead and buy points. Let's put it that way. I'll put it on you that way. I believe interest rates will go lower in the future in the next couple of years. So I'm telling people do not buy points, because every refi boom, and I mean every single one, the same thing happens. I refi a bunch of people who are like, oh man, what a bummer. I paid, $8,500 for this rate, and now I'm refinancing it 10 months later. You need years and years just to break even on those buy downs, years and years, usually 4 to 6 years just to break even. So for it to actually be a benefit, you need to keep it for another 5 or 10 years before you're really getting an ROI on your risk, right? And there's just no way that in that time frame, right, from where we are right now with where rates are at this moment, there's no way that we're gonna. I guess it's possible that rates may stay at this level and go higher. It's possible. We have to accept that, but very unlikely we won't see an opportunity that's better to refinance in the next few years. Let's put it that way. That's pretty simple, right? So if you buy points, usually rule of thumb is you want to buy points when rates are really low, so that when you're paying for those points, you're getting a rate that you'll never be able to get ever again. That's the whole idea with points. If you are in a higher rate environment, you want to take the par rate, save your money, and then when you refinance, use your money to pay the points then. Okay. So instead of buying points now when you're purchasing your home, wait until you refinance in a few years when we're in a more of a low rate environment or lower rate environment, and then pay the points to get a stupid low rate. It's a much better investment. I know it's hard to keep it in your pocket, but it's a wiser way to go, in my opinion. I could be wrong, but that's my opinion and the wisdom that I have over years and years of doing this. Okay. Now, I mentioned earlier, I mentioned a few things earlier. I mentioned earlier that we're also live right now. What's up, Mike? What's up, real estate freaks? Is that what we are now? You can say what's up here. You can comment. You can ask a question. I'll get to those in just a bit. FTC sues data broker for allegedly selling location data from hundreds of millions of phones. Holy smokes, guys. Now, everyone has seen like the freaky advertisement where you're like, oh, we were just talking about getting a new lawnmower. And then all of a sudden I started seeing ads come up on Instagram. They're definitely listening. Your phones can hear you. That data is being sold. This stuff is crazy. It's so much more than just your social and your date of birth. Here's what's happening right now in the mortgage industry, though, related to this, called trigger leads. I want to make sure everyone is aware of this. This isn't just for mortgages, though. This is for credit cards and all sorts of things. You are opted in to the Credit Bureau's marketing database from birth until you opt out. Here's where you do. You go to optoutprescreen.com. Now, this is a site that was required by the credit bureaus. Federal government required this. And there is an amendment to the Credit Reporting Agency, or I can't remember, it's the CRA, Credit Reporting Act. I think it was of 1978 or something like that. And I'm going to get to that in a second. But this is something they were required to have. Now, you'll notice that at this link, which is where you are supposed to opt out, they are trying to convince you to opt in. Hey, what are the benefits of receiving these firm offers? Listen, what happens is if you sign up for this, as soon as you sign up for a credit card, you apply for a credit card, there's going to be 10 different credit cards sending you stuff. You apply for a home loan, there's going to be 10 different home loan company, 100 home loan companies calling you. You apply for an auto loan, there's going to be 100 auto loan companies calling you. They are saying, hey, this person is looking for a mortgage, and they're sending that, and they're selling your information, a whole bunch of stuff, to these other mortgage companies. If you don't want your information to be sold, by the way, they don't give you a royalty on this. They don't give you a piece of the action. You don't get a penny every time they sell your name or something like that. You get nothing other than privacy violations, in my opinion. So they're looking on here, they're telling you, oh, here's the benefits. Oh, you're provided with product choices. Yay. You learn to have an opportunity to take advantage of offers that may not be other available. Oh, you get to shop around, blah, blah. People know how to do this. You don't need to sell my information, have randos calling me from all over the world. People are calling you from, call centers in the Philippines and all kinds of crazy stuff. You don't need this. Now, on this site, what you can do is you can opt out for 5 years electronically. This is what you're going to do. If you want to do this right here. Opt out electronically for 5 years immediately. Yeah, this can take up to a month or two to actually take effect. So do it right away. Then you can opt out permanently by sending it in the mail. So do the electronic that gives you 5 years to get something in the mail to these guys. Print out one form, sign it, send it in. It also says that, oh yeah, by the way, you can opt in on here. No one needs to opt in because everyone's already opted in. I already opted in. Now, this is considered to be firm offers, right? What is the purpose of this website? The FCRA also provides you the right to opt out. Fair Credit Reporting Act. That's what it was. Not Credit Reporting Act. Fair Credit Reporting Act prevents consumer credit reporting companies from providing your credit file information for firm offers. Okay. If you opt out. Otherwise, the credit reporting agencies have the ability to provide your credit file information for firm offers. Firm offers is a very loose term. Now, there is a bill, it's HR 7661. This is in the House. And this bill is about trigger leads. So it's to amend the Fair Credit Reporting Act to prohibit the creation and sale of trigger leads. I really hope that this passes. This is just from May of this year. I really hope this passes. If you get the chance to support HR 7661, make sure you do that. Tell your representatives about this. This is something you want. This is bad. People's information should not be sold like this. It is dangerous and it is annoying. AF. Okay. People are getting dozens and dozens of calls a day when they're already in the process of trying to do a home loan, buy a house, sell a house, do all these things all at once. Total disaster, total nightmare. So it's not just these data brokers. You see this kind of thing and you go, oh, that's a data broker. It's probably B2B or this and that. No, they're selling your information, specific information about you. And the geolocation stuff, the location data they're talking about here, that allows them to target you. For example, you went to Lowe's. Okay. They know you went to Lowe's. So now they're selling that information to Home Depot. Hey, come to Home Depot. Here's what we got. And so they're going to be doing that stuff. Protect yourselves. Be careful here. This stuff is too sensitive to just allow the credit bureaus. Go to optoutprescreen.com. I'll put the link. This is what it looks like. You do have to put your personal information in there. By the way, whenever you go to opt out, let's do it. You click down here. I'll just show you how to do it. I opted out permanently long time ago. So I don't receive these things and it's great. Here's the information you need to provide. So you provide this and look, it automatically has you checked as opt-in. So you need to go down and click electronic opt-out. They desperately don't want you to opt out. Okay. They make an absolute fortune off your information. So everything on here is going to be trying to persuade you not to opt out or to opt in particularly. So you do that. You click continue. Oh my goodness. And look at this. So they try to reject me. Do you think this is a real error? This is live. Like I'm not making this up. This just happened. Do you think this is a real error or do you think they just want me to go away? What do you think it is? Now look at this. Could just be my internet sucks. That's possible. I've been rejected now, right? And law of insurance is that they try to reject you, right? They try to reject you, get you to go away. I think there was the information I heard on this from insurance claims. Okay, here it is. So maybe it was a fluke. I don't know. You put your information in here. You do need your social, date of birth. You got to put that stuff in there, your address. You got to do the security thing. You got to confirm. Okay. This is to get you for 5 years. It's not a whole lot to do. It could take you 2 seconds. This is the official website from the Fair Credit Reporting Act, optoutprescreen.com. Okay. All right. Let's take a look here. Yeah. All right, Fresh. I'm seeing arms quadruple in the past 90 days. Yeah. Well, people want the lowest rate, so more people are going for arms. Nothing wrong with that. If an arm makes sense for you, if you're comfortable with it, if you understand how it works, and you believe that I believe that rates will drop in the next couple of 3 years the most, then you're probably, arm is probably a pretty safe bet, So as long as you know what you're getting into, for me, it's cool. Now here's what we need to do. I want to show you a couple things. So we talked about how, does everybody remember the middle finger candle? Let me see if I can make this. There's an easier way for me to get this over here. So I'm working with 2 computer screens. Don't have my normal setup here, but I'm trying to show you some stuff here. All right. This is the Dow Jones. And you guys remember we were talking, let's see, what was that? It was last week at some point. We were looking at this and we got this middle finger candle right here. This guy right here, giving us the bird. Not only that, giving us the bird and closing underneath the trend line. So that was why I said, hey, pain is coming last week for stocks. And look at that. We went from approximately 33,600 to 32,300. So 1,300 points later, then now we have this week. Now, what's interesting about this is you remember what Powell said, right? He said, where did I put it? Or did I not put that up here? Here it is. Powell warns of some pain ahead as the Fed fights to bring down inflation. Well, the Fed does need to fight inflation. It's not good. And it's one of those things that doesn't really get too much better on its own. It does have a little bit of, self correction to it. As prices get too high, people won't pay those prices. And so it sort of levels itself out a little bit. But for this kind of inflation that we have right here, it needs attention. So he's right. He's right. But this pain that we're going to see, what is it going to look like? Well, I'm going to give you just a quick prediction here, just a very simple TA on this. I have my own Fibonacci calculator that has worked very well for this kind of situation. We're trying to figure out, okay, what are targets for this pullback? Like, what can we expect? Well, here's some for the bull case. Let's make the bull case here. Just real quick, couple things for the bull case. So we have from the bottom to the top of the middle finger candle, a perfect 50% retracement today. You see this right here? Let's see if I can zoom in on this a little bit more. Okay. We actually retraced perfectly to the 50 here. It bounced right off of it. Okay, so if it's possible, whenever a trend is going to continue, pullbacks to the 50 or to the 0.5 Fibonacci are pretty normal. And so if we're right, if that's what's going to happen, then this could just go up and just blow through this whole thing. Okay, and we'd be right back on. It's all good. I don't think that's what's going to happen, though. I don't. And the reason is because there's so much confluence down here in the golden pocket. Now, the golden pocket is a 618 Fibonacci to the 0.65. You can see right in here, a lot of activity has happened in here. A lot of opening, closings, support, resistance. It feels to me like we are destined to revisit this. There's a lot of different ways that we could revisit this level. We could bounce up and then come back off of this and then end up over here. We could kind of go sideways for a little while, and then come down over here and then hit this and then go back. I mean, there's so many different ways, but I feel like we're headed to somewhere between 31.3 and 31.400. So 31.300, 31.400. That really seems to be in play here. So there probably is some more pain. Now on the bear case, that would be, I feel like that's for kind of for sure. It's just a matter of when and how we get there. If we zoom back out on this a little bit, you can see we have a bearish horn going on. So it kind of looks like a blowhorn, but it's pointing down. That's a bearish horn. Not good. It implies volatility, implies that, prices are probably headed lower. So, with that being said, it could be the case that, we're headed beneath this golden pocket. Maybe we come down, touch it, go back up, hit here, and then we head much lower. That's very possible too. If that happens, our best case scenario would be a double bottom at this level right here, which could happen. But long story short, there aren't a whole lot of cases right here that say things are looking good stock-wise. There just isn't a whole lot to it. And this is the weekly chart, by the way. And if you look at this S&P, the bearish horn is a little bit more pronounced. You kind of see it a little bit better. See how that is sort of broadening on the way down? That is not a great sign for stocks. Okay, and this is very macro. I mean, we're looking at the 1 week chart here. So when you look, can I make this bigger by chance? There we go. I think that's as big as it'll get without taking up the whole screen. Maybe I can get it on the whole screen. Yeah, anyway. So this is just kind of, what I'm expecting to see from stocks. Now, mind you, what's the whole purpose of me even looking at this? The whole purpose is because I want to see where this is headed. Where are bonds headed in this whole craziness? Typically, when stocks are doing well, as they have been, for the last couple months, let's say, stocks have been doing pretty well. But then starting to fall off, these are daily candles on bonds. And you can see that as stocks have done well, mortgage bonds have not. That makes sense. But why is it that when stocks have been down here recently, we haven't seen good pop in bonds. That's the only thing that concerns me, is that we won't get that correlation, that we won't get to see rates drop as I expected them to. But look, I'm not the only one. If Fannie Mae is saying the rate on a 30-year fixed mortgage will fall to an average of 4.5%, you know what? Let's look at where this is right now. An average of 4.5%. As of today, 5.55 is the number. So as of right now, the average on this, and I'll include this link as well in the description so you can check it out. The average right now is 5.55. The high that we saw was 5.81. So you remember earlier in the year, my prediction was we would see 6.5. That was going to be where rates would top. I was off. I'm glad I was wrong. I hoped that I was wrong. But now we're at 5.55 and they're saying 4.5. Well, where's 4.5? 4.5 is down here. That's a full percentage point lower than where we are right now. So that would be a pretty significant move. Do they know something we don't? Is there something in the cards here? Is it just BS? You know, it's just a BS prediction that has no weight to it. We have to kind of assume that. But we also have to think that they know something, at least something that we don't. So if we do see a percentage point decrease in the average mortgage rate, that is going to be super bullish. I will tell you this, the last week or so, I have seen a lot more buyers coming to the table. There have definitely been more buyers coming to the table, top of funnel, saying, hey, I'm looking at buying. I want to buy next year. I want to buy by the end of the year. I want to buy first of the year. A lot of that has been going on. Not a ton of pre-approvals, not a crazy ton of activity, but I've also lost out on multiple homes recently that all had multiple offers. So we have offers going out. We just got another rejection today. They're selling with multiple offers. So we got multiple offers, more buyers at the top of the funnel. Buyers market conditions still remain. How much longer will that be the case? Well, if rates drop 1%, it'd probably be over. That'll be that. And we can just go, all right, wow, damn. In the rear view mirror, it always looks so obvious. That's the thing about market corrections and market opportunities. When you look back at it, you always go, oh my gosh, it was so obvious. We had inflation, rates spiked, sellers panicked. It was a buyer's market. What was I doing? Gosh, I sat here on my hands. I watched it. I just stared at it. It's so easy to do that. And I think the reason why it's easy for me not to do that is because I have done that so many times. I've missed opportunities. I've sat there and just watched it. And now I know what it looks like. And right now, and as I've been saying for months and months and months now, this market smells like opportunity to me. And I am in the midst of pulling the trigger and taking advantage myself. Okay. Let's see here. What are we going to do? What are we going to do? If you guys have something you want to say, you have a question, give me a holler, of course. Let's see here. Am I going to give it this? Comments, berm. One-man band here. If you want to get a lot of people also, by the way, getting quoted rates way too high, crazy stuff. Even with rates up, rates are still in really good shape. Give me a call, shoot me an email, a text. Let me know what you're looking at. Let me know a couple pieces of information and I can get you a loan quote. We won't need to pull your credit. I can tell you what you should be looking at. So you know if the rate that you've been quoted or you've been offered is even in the ballpark of where it should be. And this is all going to be with no points and no lender fees. I have rarely had this much time on my hands in this business. I can help everyone now. I got to talk to a veteran this weekend who's going to buy in a year. I got to have this great conversation with him, divulge so much knowledge, so much experience, just dropped it on him. And, you know, that's just something that I have not been able to do a lot in the past few years. So right now is that time. I'm here. I'm available for you. I make myself available. I want to help you out. I want to help you win. Give me a shout and let's win together. Why not? I tell you this right now, I'm looking. I practice what I preach, that's for sure. I'll be here when you need me. Drop those comments, share this video, subscribe. You guys have a tremendous evening, and I'll see you again soon. Take care.